Welcome everybody to my Forex bootcamp training done Saturdays, usually around this time, 12 o'clock to 12:30. And today I thought I would share something with you that I think that's really fascinating, and I think you might get a kick out of it as well. Um, Before we jump onto the charts, I want to share with you what I did, and you might want to try this as well. Um, Now, if you're new to my channel, don't forget to subscribe. Don't forget to like. Don't forget to share. If you're watching a replay, thank you so much. If you're watching it live, thank you so much. If you're one of my subscribers, thank you so much. And I want to also thank all my future subscribers as well. If you're interested in Forex and you want to learn how to trade the Forex market, come back to this channel every now and again, review some of my videos to take copious notes on how to trade the Forex market. Now, I'm one of many people who train online, but I do things a little bit different. Um, and I do them often, so I'm trying to stay consistent every Saturday to do these trainings for you guys. So, this when I learn a new strategy, or even if I'm applying my current strategy, you guys will come back on this channel and review that information as I make it available. But yesterday, you guys heard of ChatGPT, and it's the crave now. It's the rage now. Everybody's talking about it. Everybody's trying to use it, and says it's the future, right? So if you don't know what ChatGPT is, it's a computer program that gives you answers to your questions. So you can ask any question you want, and it spits out an answer, right? Well, make sure you fact check everything. But I thought is I would question ChatGPT, and I'm going to read you the answer it gave me. I thought it was really fascinating that this answer was somewhat on point. And I'll go ahead and share that information with you guys now. So I asked ChatGPT, how can I become a profitable Forex trader within 2 weeks? I'm going to read you the response. It says here, I'm going to read it word for word. Becoming a profitable Forex trader in just 2 weeks is a challenging goal, as successful trading requires practice, experience, and continuous learning. However, there are some day-to-day steps you can take to kickstart your journey. Not bad. Very well said, right? Number one, education. Spend time each day learning about the Forex market, trading strategies, technical analysis, fundamental analysis, risk management, and more. Utilizing online resources, books, courses, and a demo training camp to enhance your knowledge. Practice, it's number two, practice. Trade on a demo account daily to practice applying different strategies, analyzing the market, and making trading decisions. This hands-on experience will help you gain confidence and improve your trading skill. Number three, set goals. Define specific, achievable trading goals for each day and week. This could include the numbers of trades you want to take, the profit targets you aim to reach, or the specific skills you want to focus on improving. Number four, keep a trading journal. Record your trading, record your trades, emotions, decisions, and outcomes in a trading journal. Reviewing this journal regularly will help you identify patterns, strengths, and weaknesses in your trading approach. Number five, stay disciplined. Follow your trading plan. Stick to your risk management rules and avoid emotional decision making. Discipline is key to long-term success in Forex trading. Number six, stay up to date. Stay informed about economic events, market news, and geographical developments that could impact currency prices. This will help you make informed trading decisions. Remember, trading success doesn't happen overnight. It takes time, dedication, and a willingness to learn from both successes and failures. Consider these 2 week period as a starting point for your trading journey and continue to refine your skills and knowledge in the days, weeks, and months ahead. This has this message has been generated by ChatGPT. Chatbot. Amazing. Rewind the video, guys, and hear that again. It's on point. 6 steps to success. And all you gotta do is follow these 6 steps, and you too will be on the road to becoming a successful, profitable trader. Phenomenal. So I definitely applaud ChatGPT for that answer. Hopefully you guys got a kick out of it as well. But now the fun starts. The fun begins. We're gonna go ahead and jump onto the market. And as you can see, there's a live market happening right now. We're actually going to be looking at Bitcoin, right? Bitcoin has actually been trading sideways, so there hasn't been a lot of good trades to really profit from. But you can catch maybe a couple of pips up or down if you know what you're looking for, right? Excuse me. Let's analyze Bitcoin. Let's make some predictions. Let's chart up the charts. Let's see what we can find. Because I like to work with an active chart. That way you guys can see exactly how I approach the market and how you should approach the market as well. Now, if you're a beginner trader, it might be foreign language to you. If you're an intermediate trader, you're probably skilled enough to know how to read the chart based on technical analysis. So I trade based on technical analysis. Okay. On Bitcoin, but in other currencies, other foreign currencies, I do also incorporate fundamental analysis as well. And I find all that information, the news and everything to keep up to date and abreast of the market. I go to Forex Factory for that information to see based on the date, time, and the calendar, and see what type of events are happening in the currency that I'm trading. So one of my favorite pairs that I trade is GBP/USD. And Forex Factory will have information on there on their on their country's global currency, the information about their gross national product, inflation, okay, trade, imports, exports, real estate, things of that nature. All that information can be found in Forex Factory, and that is part of the fundamental analysis. The technical analysis is all about reading the chart, trying to make predictions on whether the market will go in a certain direction and whether or not you can reap and benefit in some of those opportunities. Okay, so let's see if we can find an opportunity here and see if we can catch a trade as well. Okay, so of course we're going to start with the 1 hour. Okay, normally do a top-down analysis. Start with the daily and see what this market has done in the past couple of days. So, yeah, as you can see, it's been trading sideways. Okay, and if I put a box, I'll tell you exactly what I mean. We're just looking for the, the the market to come out of the box, right? So sideways is all this is sideways activity. Okay, there was no definable uptrend or downtrend. It's just a sideways activity. Now, the box that I made, you have to be patient and realize that there's going to be a breakout of the box, right? And then a retouch of the box to either continue its journey going down, because once it breaks out of the box, you could, look for trades going down. Okay. Hence a downtrend. But be very, very careful because it might go right back into the box, okay, and fake you out, right? So this is a sideways activity. Consolidation, right? Well, don't like to take trades in consolidation because you get stuck in the box and you really can't make that much money. I mean, you could have made some money if you know what you're looking for, but actually trading sideways. Now, if we go down to a lower time frame, let's say a 4 hour, we can see that within that sideways activity, within that consolidation, there was a couple of breakouts. Say this is a breakout, which is a fake out, right? Because they actually came out of the box. Okay, what you'll be looking for would be a retouch of the box for trade to go down. Look up, just look like I just said, it went right back into the box and stayed inside of this consolidation box. So you gotta be very, very careful. So the good indication that the market's going to come out of the box is by creating a bearish engulfing candle. So let's zoom in a little bit on this particular area and see if we can see a bearish engulfing candle. Now, you guys already know that you need to study Candlestick Bible Book. Okay. I send out PDFs on that for free. So if you haven't gotten a copy of it, reach out to me and I'll send you one for absolutely no cost. But you can also watch the audiobook, listen to the audiobook on my YouTube channel. Tell all your friends about it. So you can literally listen to somebody read you the entire book, whether you're driving to work, on a run, um, hanging out in the mall, put your earbuds in, listen to that as often as you can. The repetition, if you listen to it more than once, you start to memorize the information that is read to you. But let's take a look at this little breakout here that happened. And I'm going to mark it up and just show you one candle in particular that you need to look for every time there's a breakout. So let me get the arrow and show you where that is. Okay, that arrow, well, that candle is right here. We call this candle a bearish engulfing candle. Right, class? Exactly. Reason being is because this particular candle, okay, is bigger than the previous candle. All right. So as the market was breaking out of the consolidation, it came back and retouched the box with a bearish engulfing candle. And this is where you would place your trade for a ratio. Take your short percentage tool, place your trade right here, put your stop loss right above, stretch this all the way out for a 1 to 3. Okay. Stop it at a 1 to 3. And if you had caught this trade, you would have had a profitable trade, right? But this trade happened at the time. The breakout happened Wednesday, July the 3rd, okay, at 2000 hours, right? So I believe it's 8 o'clock Wednesday. That's when that breakout happened. So if you were watching Bitcoin, this is where you would have wanted to take a trade at that particular time. Okay. Now, but we're over here, right? It's like, is anything happening over here? Can I actually take a trade? Is it going to come back and retouch the consolidation box that you've created, and then continuous journey going downwards? Well, let's take a closer look at that, right? Let's try to make a prediction. Because we don't know what the market's going to do. We can only make predictions. So let's go down to the 1 hour now. Let's see, in the 1 hour, even after it came out of the consolidation box, right? What did it start doing? It started to trend a little bit higher, right? But yet it's in a box again. It's like it doesn't want to, it's creating a new box, a new sideways consolidation. That means we got to create another box. That box right here on the 1 hour. Okay. So again, we have to be patient and wait for it to break out of the box. Okay. And again, when it breaks out of the box, and I'm going to use my tool here. When it breaks out of the box, got to come back, retouch the box, and continue to turn this way, or break out of the box, come back, and continue turning this way. All right. Or it could just stay in the box. All right. So there's not a lot of activity going on in Bitcoin. So those are the three predictions, right? But we got to be prepared for each prediction. So therefore, you can set alerts on TradingView to say, alert me, TradingView, when Bitcoin comes out of this box at set number 59523.26, notify me. But when Bitcoin comes out of the box, comes out of its consolidation at 57,407.05, notify me. And you just go to this alarm that's on the right side, and you create a new alarm for Bitcoin to notify you of when those two things happen. That way, you can come back to the chart and look for either buy opportunities or sell opportunities. Okay? Because if it doesn't alert you, it stays within the consolidation box. And therefore, you don't have to take a trade at all. You just wait for it to do its thing and then, keep it moving. But you click on create alert, BTC/USD crossing. You want those numbers to be crossed, either upward or downward. You want it to be at a certain price, right? So let's grab the price. So I'm going to close that out real quick because we need to pull out my notepad and grab the price. Let me see. If I could do it this way, it'd be better. Let me get two lines, horizontal line, I'll put one here. Make it red so you guys can see that. And thicker. Grab another one, put it on the bottom of this consolidation box. So we're going to grab this line here and get the actual number. You double click the line. So here's a nice hack for you. Double click the line or shortcut. Go to coordinates and copy this number. Then you go to your alerts. Close this out. Create alert. So you want to tell TradingView to alert you of when this particular opportunity crosses that number, right? So we put the number there. Like that. We only want it to notify us one time, only once. And we want it for this day, like today's the 13th. And we're going to put it as look for buys, buy opportunities. And you can create a message for yourself. Same thing as this here. Look for buys. Look to set a buy, right? Look to set a buy order. Or look to place a buy order. Either one. Okay, we'll say the same thing for the other one. Now, TradingView would notify me either by text, email, one of those two ways, or even when I'm on the charts. It'll give me a notification and say, hey, based on your alert, take a look to see whether it's going to be a buy opportunity. We need to create another alert, okay, for the one, this one here, the one that's on the bottom of the consolidation box. So I can copy this whole number here. Okay. Control A, and then shortcut on the keyboard. Control C for copy. Click OK. Go back to my alert box. Now, some of you guys probably, skilled on how to do this. If not, hey, it's a great way to set alerts for yourself. I'm going to add one more alert by clicking the plus button. Okay, it's on the right panel, right? Click the plus button. This box pops up. We change this from horizontal line to price. We put the price right into that box. And we name it, right? Name the alert, look for cells. Okay. Look for cell opportunities. Okay. Look for cells. Either or. Keep it short and sweet. That way, when this happens, this occurrence happens, you get alerted. So I got two alerts that notify me that when one of the candles pops out or crosses above, notify me. Or pops below, crosses below, notify me. All right, so there's actually no activity, no trades right now within Bitcoin. So, I could go down to lower time frames, but I can stop right there because, I don't trade consolidations. And I encourage other people, and I encourage you who are listening, not to trade in the consolidation. Okay? Because it bounces up and down and you just don't know where it's going. But if we go look left, we can look at opportunities that happen to see if we can find a trending market. And that's where you want to back test everything, right? A trending market. Okay. See if I can find something here. In the 15-minute trending markets, like, stuff like this. Okay, so had you gone into lower time frames, you could have found a downtrend here. It's a downtrend. That's a downtrend. But again, it's inside that box, and I don't trade inside the box, especially if I'm trading higher time frames. But you can find some opportunities by putting trend lines. This is, well, it was downtrend starting here, and it continued. You have to stretch this all the way out. That's how you make a trend line. But this all right here, it's a downtrend right there. Then it broke away from the line, and this is an uptrend. Okay, So a trend is one condition continuation of either a downward movement, one continuation of an upward movement, and that's how you know put, put on trend, put on trade, on trend lines on your chart. Okay, here's another one, uptrend. So let's look at this uptrend right here. Let's break it down. This is on the 15-minute, and I want to highlight this whole area and bring it down to the 5-minute. Pay attention to this area right here. It means it's not extended. Okay, there we go. This area right here I want to focus on. 5-minute. And here it is. It is. Okay, look at that. That's a lot of activity right here, right? Let's zoom in a little bit more. We'll keep our trend line right there. I want to analyze this right here. Looks like I'm gonna run out of time. I'm trying to do this as quickly as I can. And just tell you that to catch any type of reversal, you need to put structure lines that reminds you that, hey, if the market goes above these numbers here, these lines here, you're looking for buys, right? As you can see, the market came down and started to pull away from the bottom. And when that happens, when you see higher highs being made, and when you see higher highs, there's going to be a change in the market. I'm going to take this tool, I'll lock it up. Right, so it couldn't make any lower lows. It didn't break the low. It started to make higher highs. So this high is higher than this high. It came down. Now this low is higher than this low. And it started to consolidate. This is all consolidation. Sideways movement. It came down and made another high. Consolidated again. This is all consolidated. And higher high. And all of a sudden it broke above this high. And now we have some movement happening on the upside. So this consolidation here, it stayed in this zone, made a W, broke out of the consolidation, came back in the box, retest, and it started to go higher. There's a higher than this low, this is higher than this low, lower high, we got another high, then it came all the way down and did a retracement. And if we put a fib on that, we'll probably see a 68% retracement. Then we did a higher high, all of a sudden it's higher than these highs over here. So now we have a change in the trend, or an uptrend, right? And that's how you look at the trend in particular. So there's plenty of opportunities right above this line right here. Okay. But if you would have caught the opportunities down here, that would have been better for you and made more money. But sometimes you just gotta wait and be patient. So I just want to share that with you guys really quick. Because I think I'm running out of time on my recording here. And yeah, that's what I do. That's what I do. If it's simple, simple, keep it simple. And yeah, use this particular tool because this tool can help you identify whether you're in an uptrend or a downtrend. Because the way I use it again, just to show you guys. Whenever you're on the bottom of a trend, you take in, start doing making your lines to see what's going on. This is all sideways movement. See what I'm saying? And it comes back down. Boom. All of a sudden, it does one of these numbers. Look left. It's above here, right? Above this whole structure right here. Then it comes down, does that W right here. So this is a consolidation, right? But it broke out of the box, broke out of the consolidation. Okay. So you can literally put a box right there and say, hey, that's a consolidation. Okay. Then you just wait for it to break out of the box, right? Break out, come back and retouch it, what you did. But it also consolidated. And also retrace pretty far right back into the box. See? Came right back into the box. Then popped out of the box. It's interesting to say the least. But if we take our fib tool, take a look to see at the bottom here, see, and you take it to the top, which is right here. They retrace to the 50% and popped out. Okay. Next week we'll talk about premium and discount. Anything below 50% is discount. Anything above is premium. So whenever it's in premium, you want to sell. Whenever it's in discount, you want to buy. Okay, for buy orders. All right. So it's like buy low, sell high. Remember that theory? But if you buy low, you make more money when you sell high. So that's how I use the fib tool. And if you guys want more in-depth training on the Fibonacci tool, let me know. I'll do a separate video just on that for you guys.